Good morning and welcome to Coffee Talk with Kostoff and Company. Today, Kevin's taking the day off, but I have my good friend and Instagram video guru, Sam Newman.
That is a lot to live up to.
That's a lot to live up to, but you are. Now, he's a local realtor with Keller Williams, has really jumped into the video world to show the power of how that helps everybody, really.
Yeah.
Right?
Yeah.
So I thought it'd be fun to have him on the show today and talk about what he's seeing in the market and what he's hearing in the market, and maybe dispel some of the myths that might be out there.
Sure. It's the best way I can describe it right now is weird. People keep asking me how the market is, and it's weird. And I think there's some truth to, sellers think it's 2020, buyers think it's 2008, and nobody's really right. And so
interest rates are up and prices are up, and it's a perfect storm.
Up. Yeah, absolutely. So there is a bit of an affordability issue. I think when people start looking for, okay, well, when is the crash coming, which is something I hear a lot. And it's usually not people in the industry, right? It's typically people online or your uncle. Just wait, a crash is coming. But we just don't have a whole lot of those factors in place that are necessary for that to happen.
Right, and a crash in Colorado is what, flat?
Yeah.
Instead
right.
of
yeah.
5%, right?
Exactly.
It's not New York, it's not LA, it's not Phoenix or Vegas, where we see these huge property value increases followed by the cliff.
Yeah. And we did have a bit of a correction, last year to this year. I mean, prices, depending on where you look, which month you look, we're down year over year 6-7%. But I mean, that's after a run up of 35% the few years before that. And so it's still, in my opinion, there's probably still a few percentage to go if we had another little drop, or say even flat from now to next year. That would, that would be sensible, and that would be a sign of a healthy market. When people look for crashes, there's basically three factors we have to have for a housing crash on par with what happened in 2008, right? There needs to be a widespread economic recession that causes job loss, which many people are predicting that may
or may not happen.
Right now, employment's still low, but we don't know. There needs to be a dramatic oversupply of housing inventory, which right now in the Denver Metro, I think we're still well undersupplied, right?
We definitely don't have that.
No, and for reference, I mean, before 2008, in 2006, 2007, we were over 20,000 units, between 20 and 25,000 in the Denver Metro. Now it's about 4,000, just over 4,000. So we're still so far below. And then, we also need a lack of equity in homeowners' homes. So that way, that's what causes the foreclosures, right? If you, for some reason, can't make your payment all of a sudden, and you don't have any equity, well, you can't just go sell the house, and you have an issue. You can't get out from under it. People have so much equity in their homes.
Right.
If something bad happens, you can just sell the house. And if you bought before 2019, you're probably going to make a lot of money.
Yeah, you've got at least 20% equity, right?
Yeah,
maybe even
conservatively.
30 or 40,
Yeah,
right? Depending on how much you put down when you purchase the house. We've seen double-digit growth in property values over that time period. Everybody got their tax bill, so they're realizing that gain, right? Yeah. So I guess the overarching comment is don't panic.
Yeah.
We don't have a crisis on our hands.
Right.
I think people just need to say, hey, this is the world we're in today. And if you find a house, you love the house and date the rate.
Yeah, absolutely. And if you're not looking at the data especially, it can feel like something bad is about to happen, especially when you've been told a recession's coming, and it could be a bad recession for the last 2 years? How long have they been telling us? Again, I don't know. I would still expect some sort of, essentially the Fed is willing some sort of slowdown to happen more than has happened so far. Yeah. But the data is just not there to support a big drop in home values. And too, sometimes, especially with what's happened the last couple of years, we talk about buying a house like it's a speculative investment. What's it going to do over the next year, 2 years? We're not day traders, and neither are homeowners. Real estate is not a short-term investment; it's a long-term investment. And over the long term, you're always going to win. Always. Goes up and down over the short term, but over the long term, it always does the same thing.
Right.
Yeah.
So if you have any questions about what's happening in the market, you're hearing from Uncle Joe that we're gonna have a housing crash, and you're worried about that, give us a call here at Kostoff and Company, or call Sam over at Keller Williams. We'll tell you the facts about the market, about about interest rates and how things are going. Derek Handley, Sam Newman from Keller Williams, Coffee Talk.